Mining Network's coverage of the WNS is brought to you by GovEx Uranium.
Hello, welcome back. I'm with Corey Coles, the VP of Investor Relations over at Cameco. Corey, good to be with you.
Thank you. Thanks for having me on.
Look, how are you finding the conference at the moment? Obviously, it's quite a good opportunity to talk to everyone within the supply chain. You've actually become everyone in the supply chain in some sense. But yeah, how productive so far?
Very good. This event, for the longest time, has really been an industry event. And over the past roughly decade, the investment community started to recognize this as an opportunity to come out and get some updates on what's happening across the fuel cycle, across the reactor life cycle, picture what demand looks like. They've had a lot more effort at this conference to introduce a lot of government policymakers. You've seen last year, Microsoft was here a few days ago. They just joined the World Nuclear Association. So yeah, it's that expanded view that's more positive every year right now. Every year we hear everyone saying we've never seen it this positive.
We were just chatting to the guys at Oceanwall actually, and we were talking about the emergence almost of like the tech bro industry now entering into the nuclear industry essentially. We saw Microsoft buy a nuclear plant. There's discussions of Meta, Google, every large tech company, essentially, they were insinuating that they wouldn't be surprised if they saw all of them join the WNA and be here next year as well. I guess there's a lot more I want to talk about than just the tech side of things, because I feel like this is a supplement to an underlying thesis, but there's a lot of positive signs coming out of here, isn't there, really, on top of, and I guess on top of the SMRs and the tech side of things, the underlying thesis that Cameco have at the moment of where we are in the market, what does that look like?
Well, I'd probably flip that on its head, because for us, the SMRs, the tech, all of that, that's on top of what is already a fundamental picture that we haven't seen before. Like the setup between demand that is more durable than we've ever seen and supply that is more uncertain than we've ever seen, starting to raise questions of, where pounds coming from between 2035 and 2045 in some of the outlook. So, I mean, from Cameco's perspective, our outlook has never been more bullish. We're viewing this current state of this industry as something that can really build value for decades to come, and that's how our industry works. We're not focused on tomorrow or the next day, because the customers in this room burning fuel in their reactor today bought that material at least 2 to 3 years ago, if not 10 years ago. It's not a just-in-time delivery market. You're talking about the electricity infrastructure of nations here. And you need to fuel those reactors, quite frankly, regardless of the macroeconomic conditions of a nation or the globe. So for us, the view is it's very prospective. It's building long-term value, and that's how we're setting up the company. Our strategy is centered on building value, but centered on the market. And the market, the contracting, that's what drives our production decisions, not the other way around. You can't pull pounds out of the ground and hope the demand will be there. And so we look out to the future, we see that demand set up like never before, and we are planning our production accordingly, but only able to do so once, make those investments, once we see the contract book in the portfolio build to the point that we're saying we need those pounds out of the ground. We have confidence that our customers are saying we will take those pounds. So in an industry event like this too, it's building that confidence in the fuel buyer to know that they need those pounds in the future, and that's what really gets that cycle starting, because it all starts with uranium, and there's no substitute, and there is no elasticity of demand for our product.
It seems like there's a bit of a united front at the moment with the mining companies and the producers in particular, but even with the developing companies, it seems as though everyone, for example, in Kazakhstan, we saw a 10% reduction in throughput announced, potentially even going down another 20%, and actually withholding guidance in 26. So it's really putting the ball in the utilities companies' court as to what they want to do. And even just talking to some of the developers around here, they're basically saying they can't make an FID decision until they have a certainty on higher prices over a long-term contract. Do you feel like, and I guess, what sort of pricing do you want to see, and what sort of contracts do you want to see to be able to say, okay, well, we are now confident to go and reinvest in these projects and go and build up a new supply?
Yeah, for us, the pricing obviously comes with contracting. So we don't focus on the pricing so much as the contracting that drives that. And we need to see, as an industry, replacement rate contracting. And by that I mean we'd have to look at the specific numbers, but I think we're around 170 million pounds of requirements for a year. So the expectation is that our customers will need to forward contract. And if they're not doing that, at that level of 165, 170 million pounds, well, they're obviously eating in inventories. And we haven't seen a replacement rate contracting year since 2012. So it has been, decreasing these inventories ever since, and we need to see that ramp up. So what we've seen, I would say, requiring a lot of patience from the investment community is obviously on much, when someone says long-term, you're thinking 3 to 5 years. And when we say long-term, we're looking 5 plus, 10 years even. And in that regard, we need the long-term contract to come back down to uranium, but the geopolitics, the trade uncertainty, everything else going on in the market has meant our customers are first having to focus on the services. Because when you see that uncertainty, the first thing you do is look, how much inventory do you have behind your reactor? You take a look at the parking lot and say, what do you got there? Okay, now who's fabricating my fuel? I lock up my contracts with them and decide who that's going to be, who is enriching my fuel, who is converting. And then at the end, you say, okay, now I buy the uranium and I feed it back up because now I know where it's going around the world. What we've seen is every time that this past couple of years that the customers are getting close to really, a big push on RFPs into the long-term contracting space for uranium, they get pulled back in by uncertainty to say, oh, wait a minute, I thought I had conversion solved. Maybe I don't. I thought I had enrichment solved. And obviously I'm talking Western perspective here, and that's what keeps pushing them away. But as a miner, obviously, at our core, we do remind them all the time that there, again, no elasticity of demand, no substitute. You need the uranium to feed through those services. Don't forget about that, because the longer you wait, we've already gone through a decade of underinvestment in this space, and the longer you wait, the harder it's going to be to get you that product on time to start the cycle up the chain through conversion and such.
Yeah, it's interesting. Obviously, you're in a unique position with Cameco where you are so vertically integrated. You can do every step that you mentioned there. You can sort of guarantee it. You mentioned something there where you were talking about inventories, and obviously where it's quite opaque, no one really has a great sense as to what those inventory numbers are looking like. But from what I'm hearing, a lot of the producers, their own inventories are now at all-time lows or quite low themselves. Is there a sense that it can't go on too much longer in terms of the sloshing around of uranium in the market and using up all these inventories? Are we getting near a point where that's no longer viable?
Yeah, we are near that point, on the very edge of that point. That's where we see the secondary supply, which would be, inventory, be part of that picture that is feeding into those reactors, starts to dry up, and it has been for the past number of years. Absolutely, you have to start not only buying your uranium for the next 5 to 8 years, but underpinning the investment needed to bring on that next cycle of projects. I mean, us ourselves, obviously expanding our McArthur River mine, contingent on the contracts that command those pounds, and bringing back our tier 2 production and Rabbit Lake, our 2 operations in the US. Again, it's tier 2, slightly higher cost, but it's not the price that drives that. It's the portfolio and our marketing team and logistics team that tells us, you need that extra million pounds coming from somewhere in the 2030s. Where is it going to be? Okay, well, look at what's going to be required to bring that on. It is the contract book that drives that. So the strategy, as you said, we're integrated now really all the way across, including what we'll call an exploration play into the enrichment space with GLE, but servicing reactors with Westinghouse, building reactors. We have that whole piece, and that, for us, that's how we've realized in this industry with a lot of experience that's how you build a lot of value in the future, by having that involvement. You're not necessarily waiting for the demand to come all the way up to upstream to the uranium. You're able to capture pieces of it, and you're able to pull some of the pieces around. If you're selling UF6, that includes Cameco uranium and Cameco conversion service. Slightly different than just selling conversion service to convert someone else's uranium that the customer may ship. So you're able to really be integrated and obviously offer a closer to end product to the customer as you go. And now with our piece and involvement across with Westinghouse and the involvement in the rest of the reactor space, I mean, that creates some level of more predictable, more certain cash flow and earning out in the future to maybe mitigate some of the volatility of the commodity side of our business that has taken it up now. We've always been invested across the fuel cycle, but now we have that next level that allows greater confidence and greater patience in this space where we're having to wait for the customers and be a little bit stubborn, quite frankly, that, this is what we need today. These are the parameters in terms of what we need to see for the cost per pound, the cost for services, to invest out in the future and have confidence that those services are going to be required. Because, I mean, we could sell out a lot of a lot of services and uranium at this conferences, on these types of conferences, on 3-year contracts. Well, of course, you come back in 3 years for the next contract and you got that sticky service, that sticky production, the investments that you've made. You don't want to shut those down, and we need to see long term. You can't just go for a few years at a time in this industry.
Welcome to GoVX's Muntanga uranium project. It is right next to the Kariba Dam, a 4-hour drive from Zambia's capital, Lusaka. It has great infrastructure, benefiting from road access and proximity to power lines. Zambia is a pro-mining country, and we have the support of the government for our project, which is going to be Zambia's first uranium mine. Our Muntanga project is already mine permitted, and it is a simple open pit heap leach operation.
The feasibility study is complete, and we have filed the ESIA and relocation plan. GoVX has recently announced a reverse takeover of Tomador Iron, which will result in an Australian listing, a new name, Atomic Eagle, a strengthened balance sheet and corporate structure in a market that knows Africa, supported by a proven uranium team.
Is there a risk as well with this industry? Obviously, a lot of these decisions that you are looking to make, based increasing throughput at different mines, bringing on the Tier 2 assets, all of these require capex up front, of course. The longer that you wait, the higher these capex numbers usually with inflation are going to be, and then therefore the higher the contract pricing is, right? So it almost would feel like, in my opinion, well, surely it would make sense for the utilities to do a deal sooner than later because it's delaying the inevitable.
Yeah, and there's a sense sometimes that maybe among the utilities, they almost watch each other just as much as they watch the market to see who's moving first, who's stepping out with big RFPs, who's having off-market conversations to say, you look around at all the different parts of the fuel cycle and you say, I've only got a couple companies I can buy enrichment service from. I've got a handful, 3 companies I can buy in the West, the conversion service. But then I look around, it seems like there's a lot that I can buy uranium from. So I'm going to worry about these 2 that are, really tight right now, ex-Russia, and just I'll leave that as I need to, and I'll touch back in uranium. And I think that recognition is coming now that, yeah, you do need to reinforce the investment that is needed to bring those pounds on in the future, and you need to be paying for that today. So that's where, yeah, price support is important.
What are you making of the reforms that we've seen in America? It seems like there is now more support for the entire fuel cycle in the States, and there is, I guess, bipartisan support to some extent now that obviously nuclear energy is it does contribute towards net zero goals. It is a clean fuel, and it is, from a baseload perspective, the most efficient source of energy that is on the planet. So I think we're starting to get that recognition now in geopolitics that this is required, and we're starting to see a better framework for new reactors come online in America, but we still see very little supply coming out of America itself. And I get interesting from your perspective of how much of a drive and how much of a premium could there be on North American sourced uranium moving forward? Because it seems like in this world of resource scarcity and trying to source and having security over sources of product, this seems like a bit of an issue with where the estates are at the moment.
Well, with the U.S. being the largest consumer, they at no point in history, I think, have produced anywhere near what they consume today. And I mean, that's in part geology. Obviously, the Athabasca Basin in Canada has this in a pretty special place. But also it's the trade, the global trade. Something that was introduced in the fuel report the WNA just released moments ago is looking at those dissociations between the users of nuclear fuel and those that are using nuclear power, and that's how it is across the world. You've always got a lot of consumption where there's no supply, and a lot of supply where there's no consumption, and so it's a more global industry than ever that way. But what we continue, as Cameco continue to say, is incentivize and ensure demand is confident, because a confident fuel buyer can then sign those long-term contracts that we need to invest. And in terms of whether you're going to be able to get it out of the ground, through subsidies, other things, some kind of forms of market interference almost in certain markets, that doesn't create the healthy market we want for the long term. And when there's a push for that, it almost creates a sense of it's short-term partnerships. It's short-term views that, cross that line today, and when politics change and administrations change and those kind of views change, that puts that at risk. And that's not what we want to see. We need to see the long-term support for this industry, because we're talking, 2036, the end of mine life for our Cigar Lake mine, and obviously best in class, global world-class deposit. And that one coming to an end, we have to start to feather in and think about what comes after. We've got a great exploration portfolio ourselves and a pipeline of projects to bring on into the future, and still getting great results. We don't talk about it much, obviously, because it does, as a producer, and let alone somebody who's now involved in reactor construction and maintenance, doesn't add to our valuation to be talking about that. So, but we have that in our back pocket, that we continue to look out into that long term. But coming back to that dissociation piece, that's where we look at ensuring the trading, whether it is across the West, is well supported, to ensure there's confidence among the fuel buyers, regardless of the region, that you've got strong partners with reliable production, and we can get it there when you need it, as long as there's a long-term contract to call for it well ahead of time.
And how are you looking at increased demand for reactors themselves in North America and even in Europe moving forward? Obviously, and this would be very relevant to the Westinghouse business, I'd imagine.
Yeah, absolutely.
Moving forward.
Well, I mean, you see the reactor announcements that keep coming out, whether it be the work that Westinghouse is doing with Poland, Bulgaria, Ukraine, obviously featuring pretty prominently in the U.S. among the executive orders calling for 10 under FID by 2030. Canada, I flat out say never discount Cameco and the AP1000 and Westinghouse in Canada as well, because that is a market that is in our backyard that we know well. And I think that the view globally is that we've never seen, as I said, a demand setup like this, like never before. And in part because you think back to the rest of the fuel cycle and the way that the commodity cycle as well has gone over the last number of decades. You see these short spikes. I mean, our industry is famous for, you can fit, 10 copper cycles in one uranium cycle. Yeah. You have these peaks that last for weeks and months, and these valleys that last for days. And that peak is driven by a supply event. Cigar Lake flooding, when it was under construction, that we had to, really admit there were things to change, and we improved that. And then you had events like the Olympic Dam shaft failure right around that same time. And then you had, well, everyone knows the demand side, Fukushima, but even before that, you had a demand spike that was forming around the Chinese demand coming into the market. They set targets for 2020, 53 gigawatts back in 2010, and it hit the market very hard, buying 50 million pounds from us, 50 million pounds from the Kazatomprom, and I believe it was 50 million from, at the time, Orano. And that really, I think, as we were saying before, customers watching customers, everyone kind of perked up and said, oh, China is absorbing a lot of pounds. What am I doing the next 10 years? I better pay attention and get out there and have a look. We went through this long down cycle for over a decade, and now we're in a point where we look at today's demand setup and say it's more durable than ever. That's because it's not driven by that single event now that has said, oh, there's a spike and it's going to come back down. Today, this all began, if you will, over the last 7-8 years, as you started with, around sustainability, ESG, clean energy. That has now been, I would say, emphasized, built upon by the need for national security and energy security. When you look at the costs of nuclear, and you're looking in the context of climate change, well, it looks like a very expensive solution, and we've had to work our way around those conversations and recognize that it's a need. But when you put it in the context of energy security and national security, these aren't big numbers. And that is where I think there's just been a massive buildup of support, and more durable because it's not on that single event that's going to come and go. This is now an event that is a focus for the future.
Yeah, I agree. And it looks as though the demand forecast moving forward, you're talking about these new reactors coming online in North America, or you just mentioned some that you're working on with Westinghouse in Europe. And obviously you look at places like India and China where there's explosion of growth in the nuclear sector. Where's the new supply going to come from? You just mentioned there, obviously Cigar Lake by 2036 is coming offline. The production profile in Kazakhstan is looking like it's coming down quite significantly towards the end of the 2030s as well. We've had this huge era now, decade of underinvestment already. We're still waiting for assurances that until new investments are made. I guess the real question is are we going to be in a position where there won't be enough supply to come online because we're waiting so long for these new investments?
That's always the risk, absolutely. That we're not in a situation of peak uranium or anything like that. Like the uranium is out there, the pounds are out there. It's the economic model, that pesky model between that drives the decision making, and that comes with that long-term contracting piece. As far as where it's going to come from, there are some great deposits around our backyard among some of our friends and neighbors and competitors that expect to bring these things on. And what we believe we need to see as an industry are realistic plans and commitments. Once the commitment is made to extract those pounds, it has to be on timelines that are realistic and aligned with the fact that this is not a copper mine or a gold mine. This is a nuclear facility, and these take time. They take longer. In the fuel report today, they've extended the expectation around the timelines for bringing on new supply from, I believe it was something like 8 to 15 years in the previous report 2 years ago. Now they're saying 10 to 20 years to bring these things on when you find something new. And so the danger always is that you set a bar, you set an unrealistic expectation that doesn't come through on time, on budget. I mean, this is mining. It's, on time, on budget is always difficult. But when you get really aggressive with those timelines and the customers get spooked, and so then they're maybe a little hesitant to underpin those investments. Then the investment community, of course, as well says, well, we got burned on a cycle. Now we're questioning all of this. What we need are confident plans, realistic plans, because this industry is a long term. And it goes back maybe my prior comment of, if you're looking to be a short-term partner in this industry, from Cameco's perspective, that doesn't build upon the health, and that volatility of the cycle, affects the customers in terms of, are those pounds going to be there if I lock up with you in a contract that ensures that I'm getting those pounds 10 years, because then I need that. The worst day I would view for a nuclear fuel buyer is the day you go to shut down for maintenance and refueling and the fuel isn't there. Like you never want that to happen. So that's where again, healthy market, it's just such a different commodity. That's, I think, maybe the biggest message that we continually get across. First of all, the spot market, it's a discretionary market for us. I mean, I know that's where everybody focuses, because you look at commodity and, okay, this is how the commodity is working, you're looking at a spot. But I mean, in spot, when you've seen the volatility even over the last 18 to 24 months, where you've seen it go as high as, I think, 104, down as low as 64, none of that was driven by demand. It's supply entering the market, supply being pulled out of the market, and that's how it has worked, because our customers aren't buying their run rate requirements from the spot market. They're maybe dipping in to shore up a strategic inventory on occasion. We ourselves go into that market on occasion just because it makes sense. It supports our negotiations, and it supports the prices we get on contracts we signed several years ago that might be related to market prices. So that it's just such a different market that way, that it's sometimes hard to message that it is opaque, and we understand it's very opaque and hard to understand sometimes, and hard to really know where the data points are. But the first thing everyone has to realize is it's long term. We are always having to think very long term.
Yeah, and I think that makes sense then why businesses in the uranium space would focus a lot more on the long-term contract. Obviously, you mentioned around obviously the forward planning as well, but also where the spot market, basing pricing on something that, like the spot market, where the volumes aren't that high and they can be somewhat influenced quite easily, isn't a very sustainable business model, realistically, is it? I'm just wondering, on the, and I know we're not there yet, but on the M&A side of things, and I guess this carrying on the future supply, there's been a bit of M&A, but there hasn't been a lot. And I think a lot of the developers that we're talking to here are basically saying that, again, similar to you, that they need reassurances of set pricing before they can actually make a final investment decision on their own standalone projects to then go into production, right? And they're in another position where the utilities are saying, well, until you get your financing, we don't know whether or not you're definitely going to be able to supply it. So therefore, so they're stuck. And I just wonder, when does Cameco envision, or if it ever does envision, that they could potentially come in and be that assurance that potentially, whether it be through JV, whether it be through CapEx, through Westinghouse, sort of ensuring what CapEx build might be, helping them with long-term contract. Do you see a role to play within Cameco to sort of help deliver these new projects that you're potentially not involved in right now?
Well, maybe I'd start with going back to where we began talking about Cameco being, very holistic across the fuel cycle and reactor life cycle now. So every dollar you're spending is competing with investment in other places, whether it's leaving money with SFL to invest in Westinghouse to invest in the Springfield Fuels Limited conversions piece, or the capex that you're going to be deploying to potentially advance the GLE project in global laser enrichment. But when it comes to the pipeline for uranium supply, yeah, we have projects and great potential deposits feathered in to our pipeline based on our own exploration position. But when we look out across the space, we do see some great projects. I mean, obviously many of them represented here, but it's the valuations right now that we just can't wrap our head around. I know that from an investor perspective who have been watching them, you'd see some ups and downs and think, oh, there might be a valley you maybe could have caught and got interested in. But it's not even about the valuation there. It's about the work that still needs to be done ahead. And we're firm believers in that gold Lassonde curve, that there are 2 points in a development cycle of a whether it's a junior or a developer where you are at your highest peak, and one of them is at all promise and all feasibility, and the next is at cash flow and earning down the road. Between those 2 points, there are some difficult times where true valuations may show through, and the stories and the promises have to be delivered upon. So that's something we're watching closely. There's absolutely a place in the future for picking up more in the industry and some consolidation. But right now we just can't see that because there is a lot of work ahead, and we are the only ones that have built, even our own backyard, the last 5 mines in the last number of decades. Yeah. And we have the experience up there, and we have experience with our regulator and how this industry works. And so we have our own perspective on the budgets and the proposed feasibility costs and the timelines. And so we're in a position right now to see how this all evolves and decide in the future how it may fit into our pipeline and if there's a need.
Yeah, it seems to me as though there could be a tipping point at some point when a lot of this sort of button of heads between utilities and miners sort of does get resolved. If we can come out the other side and both parties are really happy, that then could start a ripple effect of a bit of a frenzy within the uranium space where actually there's a lot of new investment coming online very simultaneously, and we actually do start seeing an explosion in this space. Would that be something that am I being too optimistic that could be a reality?
No, that could be something that spurs a lot more interest. Quite frankly, this next 12 to 18 months is going to be quite telling on how things evolve, because there are a number of hearings in front of our regulator in Canada that are going forward, and we'll see how those go. We'll see how the construction and proposed construction projects go forward from there. And then, yeah, there may be a spur of interest to say, okay, now the rubber has hit the road, and there may be something, from a consolidation perspective, something exciting that begins to develop, because right now everyone is looking at that supply-demand picture. And our friends next door here at UXC put out the information to look at an important data point in our industry is always you're looking at the uncovered requirements. We have pretty high confidence in looking at the reactors operating today, those that are under construction, and those that are proposed. And by proposed, I don't mean middle of nowhere hoping, the ones that have reached FID and are part of that requirements curve that we could project between now and 2045. And when you look at our industry as a reported price versus a discovered price, those reported contracts all get put together, summed up under that requirements curve, and there is something in the order of 3.3 billion pounds that have not yet been contracted. We know the requirements, and that doesn't include SMRs, that doesn't include potential data centers, that doesn't include all that extra. This is just the fundamental piece today, and we're billions of pounds short on contracting. So we know that contracting has to come. So then the next phase of it is, of that, if you will, contracting white space, what does the actual production profile look like? We're looking at over 1 billion pounds now that hasn't been identified among those 3.3 billion pounds between now and 2045. And as I said at the beginning, our industry, that's tomorrow. 2045 is right around the corner. So there's a significant need here coming where those investments have to be made. So yeah, when we're looking at that picture, and then we're looking at where the supply is coming from, once there's some confidence that some of these projects are moving forward with realistic timelines and realistic costs, there may be some greater attention to say, now we can link the two together, and there's a lot of exciting things to come.
All right, well, it sounds like the next, like you said, 12, 18 months are quite pivotal. But Corey, thank you for your time.
Absolutely, thank you.